Hi guys, it's Stock Curry and I'm back from vacation. So today I'm going to talk about the inflation numbers that just came out. We're going to talk about the stock market overall and why is it going down. I also want to give you a cryptocurrency market update and I want to tell you how to make money right now. So let's get into it. Okay, the first thing we're going to talk about is the stock market. Now, everybody knows the stock market has been going down. The question is the stock market about to crash? Now, I know I covered this a little bit on my video on Friday, but I just want to give you a quick update and take a look at the Shiller PE ratio, which a lot of people have been talking about. Because if we take a look at the Shiller PE ratio, it is now the second highest that it's ever been. In fact, the only time it was ever higher than this was during the dot-com bubble, right at the end of 1999, right before the entire market crashed in 2000. And so a lot of people think the stock market is about to crash again. So do I think the stock market is about to crash again? Yes. Yes, I do. However, not yet, not right now. One thing I've learned through my decades of trading is that the stock market always goes through a correction or crash way later than anybody think it is going to. And so right now, there are a couple of things that are propping up the stock market. One of those being that the government continues to spend money. We have this huge infrastructure bill that's coming out that is going to put trillions of dollars into the economy. We also have the fact that interest rates remain extremely low. Now, what will trigger an actual stock market crash would have to be that the government was stop spending money. We get no more stimulus bills. We get no more infrastructure spending, nothing like that. At the same time, interest rates would have to rise and the Fed would have to stop buying bonds. And so all of those combined could cause the market overall to finally go through the crash and stop being artificially pumped up by the government like it is right now. But it's not happening yet. So right now, I don't think there's anything to worry about, but it is something to keep on your radar because I do think it will happen soon, possibly by the end of this year or early next year. We'll just have to wait and see and figure out when the government's going to stop spending money and stop propping up the market. Now, one thing I did notice as I was going through the markets today and just trying to get caught up from my vacation is that the FANG stocks, that is your large cap tech stocks, the Apple, Amazon, Microsoft, stocks like those, they continue to rise and they're rising going into earnings. Now, they also remain overbought. I do not think that these stocks will continue to rise after earnings. I really think that earnings are going to come out and these stocks are going to start coming back down. And so if I were you, I mean, personally, I would not invest in these stocks right now. I am staying away from them. I'm actually thinking about possibly doing some put options on them or some covered calls, maybe some bearish vertical call spreads, something like that. I'm really looking at a way of somehow shorting these stocks because I do think that they are overbought and they're going to come back down. And if I don't think they're overbought, they are overbought. Just go look at the RSI, you'll see it. So I am expecting those stocks to come down. I would not be investing in those stocks at this time. Okay, before we get into the inflation numbers, I just want to give you a quick update on Webull and what's happening with that. As you guys know, Webull has had a promotion for the past few weeks where if you sign up using my link in the description or first comment below and you deposit just $5, Webull's going to send you 2 free stocks worth up to $2,300. But that promotion is ending on July 20th. So you only have about 1 week left to actually take advantage of that. The entire promotion was put together because Webull introduced fractional share trading. Fractional shares is where you can buy shares at a very expensive company, say something like Tesla or Amazon or something like that, and you can buy a fraction of a share for as little as $5. And so to go along with that whole thing that Webull brought out, the whole fractional share trading, Webull decided to do a promotion where if you deposit $5, then you would get 2 free stocks worth up to $2,300. Now, if you are one of the hundreds of people that have signed up using my link, but you never actually made your deposit, go ahead and deposit $5 now so that you can take advantage of the promotion that Webull has going on right now. And if you haven't signed up yet, well, go ahead and sign up using my link and then deposit $5 and do all of that by July 20th. Again, you got 1 week left for that. Okay, let's talk about the inflation numbers that came out today. Now, as you might have heard, the Consumer Price Index, or CPI, inflation numbers came out today, and they were hotter than expected. The CPI overall came in at 5.4%, and the core CPI came in at 4.5%. That is the highest inflation that we have seen since 1991. The stock market did sell off today on the news, but the 10-year treasury yield also went down. And I find that kind of interesting. I think it really shows shows how a lot of people, at least the bond markets, are expecting the high inflation to be temporary or transitory. The inflation was mostly due to travel industries, things like used car sales, gasoline prices, airline prices, and hotel prices. Those were the main things that went up. In fact, used cars were by far the biggest portion of it. The used car prices were up 10% month over month and 45% year over year. It was a massive, massive jump. The thing is, the stock market didn't really sell off as much as it probably could have because the used cars are something that you just don't buy that often, right? I mean, how often do you go out and buy a new car? It's just not very often that you're going out and buying a new or used car. Maybe, once every couple of years maybe. And so it doesn't really affect consumers on a day-to-day basis, say had food gone up 10%. It's a lot less of an impact. And so I think that's why the bond market especially just kind of shrugged off the inflation numbers this time, is because the bulk of it was in used cars. So overall, the market does see the inflation numbers as transitory still, but this will continue to hurt growth stocks in the short term, because growth stocks are continuing to be hurt by high inflation, which makes the cost of borrowing more expensive, and it makes profit margins lower. So growth stocks are definitely going to continue to suffer. If you have a lot of high growth stocks in your portfolio, you're probably going to continue to see some difficulties with those stocks. In fact, me personally, I went on vacation, and when I left, pretty much my entire portfolio was green. When I came back, pretty much my entire portfolio was red. The only thing that was up were my inflation hedges. That is, my energy stock was up, my Morgan Stanley banking stock was up, and my pharmaceutical stocks were up. Everything else was down. And so there you go. Banking, energy, pharmaceuticals, your three inflation hedges, those were all up, and then everything else was down. So I do recommend that if you're concerned about inflation and you have a lot of high growth stocks, maybe start thinking about the high inflation hedges, which would be your banking, your energy, and your pharmaceuticals. Okay, let's talk about our cryptocurrencies and get into our stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some pretty large investment banks, and now I analyze stock picks from the top 10 YouTubers. Every day, I watch hours of videos from the top 10 YouTubers, and then I consolidate all of their stock picks into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified when I release my next video. And if you're watching this on Facebook, go ahead and follow the page also. In fact, I'll give you guys 5 seconds to do that right now. Alright, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor, and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. Alright, let's get into today's stock picks. Okay, let's start with a cryptocurrency update because I've been on vacation for the past few days and crypto markets have really been going down. I'm going to use Ethereum for this discussion, but what I'm about to talk about applies to pretty much all cryptocurrencies. Cryptocurrencies continue to drop in price. The rebound that we saw a few weeks ago failed to hold. Ethereum is now back below the 200-day EMA, on its way down to the 300-day EMA. The MACD also just formed a death cross, and the MACD histogram is falling as well. The RSI is also dropping. All signs point to crypto continuing to fall in the short term. I do think that we'll see ETH get back down to $1,700 this week. But if it drops below $1,700, and it very well might, then there's no telling how low ETH will go. And with Bitcoin, you can see that it was right at a critical level of support. If this drops below 32,000 and stays there, then BTC could drop all the way down to 12,500 over the next few weeks. Okay, now on to our stock picks, and first up is AMC. This is AMC Movie Theaters. As you can see, AMC continues to drop in price. At the same time, strange trading activity also continues to increase. As Keen and Grace pointed out, between the 15th and 30th of June, an additional 8 million shares of AMC were borrowed, and yet the number of shares being shorted dropped by 10 million. The fact is, you just don't borrow shares unless you plan to short a stock. The reason is because you have to pay borrow fees on those shares. So why would you pay borrow fees if you're not actually shorting the stock? It's very strange and is another sign of the massive market manipulation taking place. Another possibility could be that these shares were borrowed to change naked short positions into legal short positions. In other words, shares were borrowed for shares that had already been previously shorted. That actually makes more sense to me given the fact that AMC was on the SHO threshold list. Now that the stock price is going down, some hedge funds are closing their short positions and taking profits. That is freeing up shares and making more shares available to borrow. Other hedge funds are borrowing those shares to convert their naked short positions into legal short positions. At least that's what I think is happening based upon my years of experience in securities lending. I could be wrong though, nobody knows for sure outside of the hedge funds who are actually borrowing the shares. Now Keen and Grace went over some other thoughts on the AMC manipulation that is happening, so if you want to know more about AMC, then I encourage you to go watch Keen and Grace's video that he uploaded Tuesday. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo got back from vacation and uploaded a video discussing NIO and why it dropped. I had told you that I expected a pullback on NIO, so the recent drop was not unexpected. When discussing why NIO dropped, first StockMo discussed an article saying that large institutions were closing out their NIO positions. Now, if we look at Fintel to get the bigger picture, we can see that yes, one institution closed out their position, but every other institution either opened new positions or bought more. So be careful with these FUD articles. They only report what they want you to hear, and they always leave out the bigger picture. The next thing StockMo covered was the VIE issue. When most foreign companies list on the US stock market, they do so through an ADR or American Depository Receipt. That basically means that shares are held at a US bank, and then US investors can buy the ADRs on the open market. But Chinese stocks can't use the ADR business model. Instead, they use a variable interest entity or VIE structure. This is true for all Chinese companies, including Alibaba, Didi, and NIO. A VIE is another company, usually established in the Cayman Islands, with multiple contractual obligations that almost perfectly mimic owning stock in the Chinese company. American investors then own shares in the Cayman Islands shell company. All of that is fine and gives American investors a chance to profit off of Chinese companies. Or at least it was fine, until a Bloomberg article came out saying that China plans to tighten restrictions on overseas listings of Chinese companies. Nobody is really sure what that means yet, but the news created enough FUD or fear, uncertainty, and doubt to cause Chinese stocks to drop. Right now, it looks like China plans to require approval for the use of VIEs. There are some who think that certain companies might be delisted by China if they do not get approval to use a VIE. But this could also be a good thing, because it could create a level of legitimacy on the VIE structure, since companies will have to be vetted by China before being listed in the United States. The third thing that StockMo covered was what NIO announced on Battery Day. If you want to know more about NIO's Battery Day announcements, then I recommend you go watch StockMo's video that he uploaded Tuesday morning. Okay, last we're going to talk about SNPR. This is the SPAC. They're merging with Voltage Charging, which is a manufacturer of EV charging stations. Not to be confused with Voltage Charger, which is a manufacturer of magnetic charging cables for phones. Voltage Charging has over 1,500 charging stations nationwide, with another 1,100 contracted to be installed and another 10,000 in the pipeline. Larry Jones likes Voltage Charging because their charging stations display ads, which increases their revenue. Each charging station has 2 screens. The more people who use Voltage charging stations, the more advertisers they can work with, which in turn means more revenue for Volta. Volta encourages drivers to charge with them by offering drivers their first 15 minutes of charging for free. Volta is a small player right now, but they are expected to grow rapidly. If you want to know more about SNPR, then I encourage you to go watch Larry Jones' video that he uploaded Tuesday. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description or first comment below and deposit just $5, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have commission-free trading in the United States and highly discounted trading everywhere else in the world, with commissions starting at just $1 Canadian, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers have full pre-market and after-hours trading from 4 a.m. Eastern all the way to 8 p.m. Eastern. And I do have material connections with both Webull and Interactive Brokers, so when you sign up, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos. Now, don't forget to hit that like button, subscribe, and click the bell icon if you haven't already. If you're following us on Facebook, go ahead and click that follow button right now if you're not currently following the page. I hope you have a lot of success trading, and I will see you tomorrow.